This is how I do my daily charting in under 5 minutes. This is how I get my levels, set my plan, set my strategy, and that's what I do on a daily basis. Hey guys, it's Will. Welcome to the channel. I'm a part-time day trader trying to become a full-time, and if you guys are interested, join along with me. Let's get into the charts. Now, looking at the charts, there's multiple time frames that you should be looking at. There's the daily, there's a 4 hour, there's a 1 hour, there's 30 minutes, there's 15 minutes, but higher time frame is always king. So what do? I go to the higher time frame and I slowly work my way down. Usually I base off everything in the 4 hour. But first, let's go to the daily. You can see here I already marked out a lot of the levels that I have in the past. The main thing why I look at the daily chart is to look at the bigger picture. The bigger picture of what is happening in the market. Is it an uptrend or is it a downtrend? You can see over here as I scroll out that we are definitely in an uptrend. That slowly it goes up over time. That is an uptrend. Just because we see that we're in uptrend, intraday actions could be different. If you look closer in the daily timeframes, you can see that there's gaps everywhere. There's gaps, small gaps, small gaps. But if you look in lower time frames, you won't see these gaps. And they're important because they usually get filled over time. You see how there's a gap over here, then the gap fills down here. It doesn't mean that if there's a gap, it'll fill the next day. So some people just see there's a gap and then they'll try shorting it just to see that it goes there. Because when there's a gap, there's a likely chance that once it gets to that level, it'll just gap right away. You can research more about that. That's called fair market value gaps. After I go to the daily chart, I go to the 4 hour chart. The reason why we look at bigger time frames is because we can see the trend of the market. We can see that there's more data and it is more reliable over time. When you first look at your charts, it's going to look like this. And what do? When I first chart, I look for supply and demand levels. I look for support and resistance. I usually just put them all together and just call it supply and demand. To find my key areas, I look for multiple touches. So we can see that there's resistance on this level and this level, and then it turns into support. If I just drew a line here, this will be a whole support zone right here. This level got rejected. It got rejected again. Then once it finally broke through, it retested the level right here, and then it went up. It hasn't broken down since then. This whole zone right here is a support level. This is a major support level. This is over a 4 hour time frame. The time frame, this will be July. This is August. This is September, October, November, and December, and this is January right now. If we're playing a strategy, we can't just wait for this zone to touch because it can take multiple months or maybe it'll take a year to get to that level. So that's why this is a key level. We can also chart off different levels as well. So this right here is a level right here. This right here is a level here. This was resistance, and then once it came back to that level, it held, and then it kept going further. You can also chart one up here. This is the all-time highs. If it ever breaks this level, you can wait for a retest for a long. Now looking back with all my levels that I charted, you can see that from earlier that the level I marked off was a big level, which was the 565. This was the previous all-time highs that it couldn't break through. Once it broke through, then it kept holding. Now after that level, you can see that there's still levels that you can chart off. You can see that there was resistance here. This was the next all-time high levels. This is where you put your level. Once it finally broke through that level, it held. And then again, it retested again and it held. This is one level. Once the market broke through, it went to all-time highs. This is the next level that we can chart off. What happened later? It finally broke through. Then that level becomes a support level that you can chart off. It retests that level and it goes back up. You can see how when it comes back down here, it still has a strong influence on that level. There's a support level here. There's a support level here and also here. You see that multiple times every time it came down here, it went back up. Once it finally broke down, it went back down. Once it got back up, it went straight up. So now I'm looking at the 1 hour and we can see that these levels are getting respected. We can see that this was a support zone. It came back to retest it, it held. It came back to retest it, it held again. It came back to retest it, it held. This is a supply rejection because every time it got up here, this is all-time highs as well. Every time it got up here, it got rejected. Once this zone finally broke down, it went straight down. And my strategy is a break and retest. I can't trade off this right here. I can't trade because it's straight down. But I wait for the retest. It finally retested after like a week or two. It retested that zone and then it broke down. That is what I look for on a daily basis. But this is the 1 hour chart, right? Let's look at the 30-minute chart. So this is the 30-minute chart. Looks pretty much exactly the same. It's still hard to read if you're trading that day. And this is why you go down to the 50-minute chart. This is why you go down to the 2-minute chart and look on that day. So now right here, this is a 2-minute time frame. You can see that the levels are still here. You can see how the level is still rejecting this level, it's still rejecting this level. This is the support zone that I was showing you guys earlier. And then once it broke down, it went straight down. But what I look for is a break and retest. So I look for the break of this level, retest, and look for the continuation. If we zoom in closer on that day, we can see that it broke down. It retested this level right here, retested it, and it went back down. It happened around 2 p.m., which is the time I don't trade. But if it happened earlier, if it happened in the first hour of the market, it broke down, it retested and went down, then I would have taken the trade, but it hasn't. So what I do, I don't take that trade. I wait for the next setup. Going back to the 30-minute time frame, this is where it broke down from earlier. It retested it and it went back down. A week later, it finally went back all the way back up. It retested that level and then it broke back down. This is how I get my levels. I go to the 2-minute time frame and that's where I place my trade. I look for what I want to look for, set my plan, set my strategy, and that's what I do on a daily basis. This is the break and retest, and this is how I chart my levels. And what I like to say is how you do one thing is how you do everything. If you keep staying consistent, you keep staying disciplined, you keep charting every day, then you'll become better at charting every day. You just gotta keep doing it and just keep getting better at it. Let's get 1% better every day, and I'll see you in the next one.